Welcome back, and joining me with more insight on the day's trade is Stephen Schultz from Momentum Securities. Thank you so much for your time, Stephen. In a week in which I thought that we would see the kind of stress and jitters that we saw on Liberation Day on the 2nd of April, things actually turned out the opposite for markets. What have you made of how investors have approached the markets this week?
I think it's so surprising how some of the headlines are so disturbing, yet the market seems to continue to find new highs. As you mentioned, a very busy week. We saw some pretty positive in general earnings numbers out of the US in particular, some local. We saw tariff escalations, jitters from central banks, the Fed in particular, and the Bank of England yesterday, and a chaotic gold market courtesy of Donald Trump. Who else?
Exactly. We live in his world. It's his world, and we just live in it, Stephen. Actually, just talking about gold, because, I mean, gold has really been the star of the show, and particularly on the JSE, how we also even ended up in this situation of record highs. How are you reading the gold market at this point?
So I think in general, there's a lot of structural support for gold, and therefore we are bullish on gold in general, companies as well as the metal. But I think Trump, ever the unpredictable showman this morning, was a great example, announcing that he's applying tariffs to 1 kilogram gold bars. It could just be an attempt at another gut punch for Switzerland, obviously a big intermediary in that particular 1 kilogram gold bar market. And they are reeling this morning. But perhaps more importantly, a lot of price volatility across the world, including London this morning, because it was a bit of a surprise announcement. Nobody even knew whether it is in effect, whether it's coming into effect, if there's any exemptions, where it applies. And I think that's just symbolic of some of the chaos that we're forced to live with nowadays.
Indeed, yeah. Everything is very volatile. You never really know which direction anything is going in at this point. But seeming that coal is going in one direction, as we saw from the results that came out of Thungela. Of course, that share nosediving almost 11% in morning trade. And this is after the coal miner released its interim trading statement saying that it expects its headline earnings per share to dive by as much as 85%. More evidence of just the stress in the coal market at this point?
Unfortunately so. I don't think it was altogether surprising, but perhaps the magnitude of headline earnings deteriorating is what forced the share price into free fall this morning. Thungela hasn't had a great time of late. I think it's no secret. It is down around a third over the past 12 months. There were some operational complications and 2 mines coming to end of life, which resulted in a once-off of 285 million rand. But I think more importantly, the macro headwinds are weighing on the company, with energy markets really soft at present. And I think the only thing capable of resuming any form of rally for Thungela would be global growth picking up. And that's probably not going to happen anytime soon.
Well, a share price that's not too stressed today is Sappy. And quite surprisingly, it was a day after the release of their third quarter results, in which they saw a loss. I think it was a loss for the second consecutive quarter. We did see pressure yesterday, but seeing that investors came back today at some point, it was up over 5%. And I'm wondering if this is just bargain hunting.
I was hoping you weren't going to ask me, because I too can't make much sense of it. The numbers were horrible yesterday.
Yeah.
I do think there's some truth in the fact that it's just been so downtrodden at this point. I mean, it's pretty much half the market cap erased over the past year. So potentially there is a bit of bargain hunting creeping in. But one wonders what those bargain hunters are seeing, because I think in light of all the tariffs, trade uncertainty, its operating performance, climbing debt, a cut in dividends, there doesn't seem to be any good news in the counter.
Yeah. Well, seeming that some good news is coming from Hullmans on their investment on the can body stream. And actually, a thing that jumped out at me is that they've made this investment so that they can cut reliance on imports. A good thing in these times?
Definitely. I think this is the culmination of a few years of work by management. The turnaround was really initiated as far back as 2022. They announced today that they have completed the final stage of that, which was, of course, the technically challenging widening of its cold rolling mill. So operationally, we expect it to improve going forward. The beauty is it is a small cap. I mean, under R1 billion market cap means any material improvements and the share price can really run. It's got a great business locally. And I think there's a great opportunity, notwithstanding all the trade headwinds, for them to improve their exporting. Never mind cut back on imports. I think they can improve their exporting business quite materially, which today is less than half of their revenue.
All right. Well, Stephen, let's get to your stock pick for today. Where are you finding opportunity this Friday?
At the risk of sounding a little bit schizophrenic from my earlier comments, this is a counter that's, I think, reliant on global growth resuming. It is a great company in that it is Glencore, the diversified miner. It's got great exposure to coal assets as well as copper. Operationally, there have been some hiccups in the previous period of review, and I think those numbers were expressed earlier, and the market was quite disappointed. But a great operator. I think if there is any global growth resumption and commodity prices find a level of stability, the turn of the cycle can really see this particular counter run. And quite frankly, under 70 Rand a share for Glencore, for me, represents a bargain. However, I think investors may need to be patient on that one.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money this week, Stephen. That was Stephen Schultz from Momentum Securities.